In this video, I'll be documenting the very first investments on my stocks and shares ISA journey. My main focus going forward will be building tax-free passive income through dividends. My aim with this channel is to be as transparent as possible with my investments and portfolio in general. I hope this will help others to see the realities of investing as well as the highs and lows along the way. There will be monthly portfolio updates detailing exactly how much cash goes into the account and which companies it's used to purchase, as well as the dividends earned along the way. If that's something that interests you, then consider subscribing so you don't miss out on new uploads. The content of this video should not be taken as financial advice. I'm only sharing my own experiences. In ascending order now, from the worst to best performers in my portfolio this month. First off, it's Bluefield Solar Income Fund in the energy sector. Bluefield Solar is an investment fund that's involved with renewable energy. With many government targets aimed at reducing carbon emissions in place, renewable energy seems like a good place to invest over the long term. In addition to this, Bluefield Solar has a solid dividend of 6.01%, which is paid quarterly, and a good, albeit fairly brief, history of reliable dividend payments. Bluefield Solar is up 3.08% this month and 12.81% over the last 12 months. Tesco now in the consumer staples sector. Companies in this sector tend to fare better than others during a recession. Tesco also pay a very respectable dividend of 5.06% with a dividend cover of 2.4, which means Tesco can comfortably afford to pay the dividend. Anything over 2 is generally considered to be good. The month of November saw Tesco's price rise by 4.73%. However, despite this rise, Tesco is still down 17.96% on the yearly timeframe. My most recent and final purchase for the month of November was National Grid in the utilities sector. As with Tesco in the consumer staples sector, utilities tend to be more resilient during a recession. National Grid also has an impressive history of reliable dividend payments, as well as dividend increases. The dividend currently sits at a solid 5.1%. National Grid is up 5.08% this month, which brings its 1-year return back into the positive at 0.47%. Onto the iShares Core FTSE 100 ETF. This ETF was my very first purchase. It mirrors the FTSE 100's performance, so it seemed like a relatively simple way to get things kicked off, with plenty of diversification. This ETF offers a decent 3.8% dividend whilst giving exposure to the top 100 companies listed on the London Stock Exchange. I'll be sure to add more to this position in the near future. As well as being my first purchase, it's also been the best performer this month with a growth of 5.71%. It's up just slightly less over the past year at 5.57%. Here you can see each individual stock's performance from best to worst in a nice, easy to read and more visual format. Let's take a look at the performance of the sectors. This is based on the stocks I own in the sector and not the sector as a whole. As I currently only have one stock in each sector, this chart will give the same results as the previous one. This chart will provide more insight going forwards when I have multiple stocks in the same sector. On to sector weighting now. I'm currently focusing on building a solid foundation with mainly stocks that belong to what's known as the defensive sectors. The defensive sectors are generally considered to be consumer staples, utilities and healthcare. I will probably look to get some exposure to the healthcare sector next, if I can find something I like the look of. Keeping track of your portfolio's weighting in terms of sectors like this will help you to ensure you're not overly exposed to any one sector, as this can leave you open to unnecessary risk. In addition to tracking the sector's weighting, it's also helpful to keep an eye on individual stocks too. The goal is not to simply have all your positions be equal in size. It's more to ensure that no one or two stocks start to overly dominate the portfolio. You don't want to be in a position where you're overly exposed to one stock and some sort of unexpected negative event has a huge impact on the company's share price and therefore your portfolio's value too. This month I added a total of 1,565 to the account. I aim to add a minimum of 1,000 per month for the time being. Capital gains this month stand at £86.56. Unfortunately, nothing's actually come in yet as far as dividends are concerned, so nothing to report here. The monthly portfolio growth section is dependent on last month's figures for comparison, so I'll have to just leave it blank until next month. The portfolio's market value currently sits at 1,655, which I'm quite happy with at the 1 month mark. I'll really get a kick out of seeing this number grow month by month in this visual bar chart format. As previously established, there's a big fat zero in this section right now, as I just missed the ex-dividend date on 3 out of the 4 stocks I currently own, and the one I did catch in time is not due for payment until January. I've chosen to include this section anyway to set the structure for upcoming videos and so that I can look back on it in the future for motivation. Given that this is my first month investing with this account, the all-time figures are the same as the monthly figures, so there's no need to go over these again right now. If you found any value in this video, consider liking, as it will really help out with the algorithm at this early stage. Check back soon for the next update as things get more interesting when I have a bit more cash and data to work with.